Welcome to the end of day review for Thursday, the 30th of November 2023. Starting off with the economic calendar. As we can see, there was a bunch of Euro CPI news for today. That was negative for the Euro, and as a result, the Euro somewhat plummeted. And in terms of red folder news for the USD, it was fairly neutral, nothing of significance to note that would tell us to favor one side of the price over the other. But yeah, in terms of Euro, Forex Factory has it as medium impact, and I guess because it's the estimate, it is medium impact and not necessarily high impact. And I've looked over the past few months and noticed when this sort of news comes out, the impact isn't like how we see for the USD or GBP CPI news. So I guess it makes sense why it is medium impact. But yeah, I'll jump back into the charts. We can start with Euro USD on the 4 hour. Essentially, we started off the day right around here, still under the premise of a ERL continuation momentum phase, because this 4HOB wasn't validated as a pullback phase chalk. In addition, on the daily, we didn't yet have validation of the swing high, because yesterday's candle, although it closed bearish, it still made a higher high, so we still didn't have validation that this was the swing high. So when we came into the London session, the premise was to trade based on the idea that demand was still in control. That the ERL continuation momentum phase was still at play, and thus we were favoring longs coming into the morning. I'm just going to switch to my EOD charts, which I've already marked up for today. But yeah, I guess the day didn't go as expected because we were anticipating a bullish move, because we had this reversal and there was still this target to take out. So anyway, as the day progressed, what you will see is we had this 1 minute demand chain which is somewhat associated to the 4 hour, and after I took the loss from today, I was investigating this a bit more, but I'll touch on that as we go through it. Essentially, then what happened is at around 12 my time, we had the 4 hour validation that okay, we broke the pullback phase change of character, and that essentially validated to us that okay, the ERL continuation momentum phase is done, and that the pullback phase was in play, and you've got this pullback phase primary leg over here. However, by the time we came into the New York session, we had already tapped into the pro trend confirmed extreme. As you can see, all of this has been efficiently mitigated. So if this POI fails with a body break, then our next best bet is to wait for either price to break the swing low, or for us to create a primary leg via a 4H chalk OB body break, which would then validate a new primary leg. However, until then, going forward, our idea was to long, and that was the same idea during the New York session. However, we had to factor in the US news release, right? Because Euro news was negative for the Euro, we needed positive USD news to somewhat support the idea of longs. If we go quickly to the hourly, I'll show you that we had this demand chain, and the only way to anchor our fib was to use the low of the day from 2 days ago. And this is the aspect I wasn't necessarily comfortable with, which then led me to investigating, and I think my conclusion is my intraday timeframes and timeframes for validating trade ideas will stop at the 30 minute, and my fib levels will not be used beyond the previous high of the day or low of the day. Just to because from what I've seen, when you do this is too old of PA, right? And things have already started shifting. And trying to catch this long was maybe not the smartest idea, although it is currently in my trade plan. I am seeking to amend it. So I took this loss during the London session, and then obviously the inflation news for Euro came out. However, I was already out of this trade at 10 a.m. 2 hours before this, so it's not because of the news that I took the loss. It was simply because things have already started shifting. If we go to the 15-minute, there wasn't, for the London session specifically, there wasn't any reason to consider shorts until at 12 p.m. when we validated this change of character, at which point we already had tapped into the pro-trend extreme, which suggested that we should consider longs, right? Also from an ADR or daily range perspective, which is roughly 70 pips for Euro USD, we've already reached that target, so trying to continue shorting is probably not the best idea. And then coming into the New York session, we essentially waited for the personal income and PCE price index news to hit. None of it was significantly positive, or none of it was rather significantly negative for the USD, which would support an idea to long Euro USD. However, because that didn't happen, I decided, okay, that's the end of my trading day for today. Hopping onto GBPUSD quickly, starting off with the daily. What you will see on here is essentially yesterday we closed with a bullish candle, thus giving us lots of confluence, being that today is essentially day 5, I believe, 1, 2, 3, 4, day 6 of a potential bullish candle, which is highly unlikely, and thus the ERL reversal is more than likely what's going to happen for today. The target for ERL continuation momentum trades, longs in this case, would have been this daily structural liquidity, and for shorts was this fair value gap. I'll go on to the 15-minute to illustrate what had happened. Essentially, we came into the morning during the Asia session. We were waiting for one side of the range to be liquidated to then tell us which side to trade. However, GBPUSD was quite complex because yesterday already we started creating this ERL reversal leg, which you can see here. There's this 15-minute chalk, and then you can see supply to control, and then there was another chalk where demand was yet to hold. However, we've then created this ERL reversal primary leg, which is supported in the circumstance because this yesterday made a higher high, so we didn't yet validate a new swing higher high, hence the ERL reversal. The ERL continuation momentum scenario is still applicable. Then from then onwards, we essentially tapped this 15-minute pro-trend leg OB that supported why this should be a primary leg based on the pro-trend leg, right? So we had reasons to both long and short. In terms of reasons to short, we had this with a chalk, and then when the Asia low was broken, we then validated that supply was in control rather than demand, which gave us reason to short. However, at this stage, my trade for Euro USD had been triggered, which invalidated me trading shorts on GBP USD. In addition to that, what you would see is when price came into my area for entry for GBP USD, you'll notice that the Asia range, the Frankfurt range was still intact, which would require me to put my entry at or above this Frankfurt range and my stop loss above the high of the day, on the assumption that the high of the day will hold. However, given how close these two aspects are, it's more than likely that this is going to be swept, which then led me to my next consideration of, given that the previous high of the day is higher than the current high of the day, why not use that as an anchoring bias to then have your entry here, but then use this fib to help you identify a valid flip level. In this scenario, we have reasons to long and short from a forex narrative perspective, and thus we should cover the previous high of the day, and the entry would have looked something like this right here. Something like this. We'd have the entry here and our stop around here at about 19 pips, and we'd have our target at 1 to 3. That's fine because we do have ADR, because on GBPUSD it's about 90 pips, and you can see we more than surpassed it. In fact, we even reached a 1 to 5. However, this was probably the reasonable target for the day, given that we have this daily fair value gap and we're playing under the ERL continuation momentum scenario. However, the next factor to then consider was the fact that at 12 we then validated that the pullback phase is in effect because the 4-hour candle body closed this 4H OB. I'll quickly jump to the 4 hours so you can see what I mean. So we had this 4H valid OB validated by a body break, so we're happy with the OB. Then 12 p.m. candle closed, and thus validated that we're in the pullback phase, which then eliminated any ERL continuation momentum scenarios and brought into effect the pro-trend scenario and the pro-trend reversal scenario. Then going from there into the New York session, I then per my trade plan rules, because I traded EURUSD, I'm essentially stuck with trading EURUSD for the rest of the day, and thus I didn't have much of a plan for trading GBPUSD since it was off the cards for me. However, what we can do now is just analyze what had happened. So at 3:30 we had some news coming out for the USD, which was fairly neutral, and given that we're in the pullback phase, we could essentially continue to short. The only and also this is a pro-trend OB, but it isn't the extreme, right? So we are able to trade through it, and if you just evaluate where this essentially taps into, so you can see New York session taps into the 50%. However, you'd need a valid POI to enable you to trade this this POI here, and your options are either a supply chain or a supply demand flip, which if we look here we probably have, yeah, we've got one right there. So you have your S&D flip right here, S&D flip, and you'd enter the 50% right there with your stop around here targeting this ADR. However, you don't really have space, so it's probably not a valid trade given the risk reward. Anyway, that brings me to the end of my end of day review for today. We'll chat again for the London session.